June 5th, 2025. Uh, Obviously, of the takeable 3 bar micro channels today, I don't trade before bar 7, so I don't necessarily consider this one to be takeable. But there were 8 signals: one, two, three, four, five, six, seven, eight. 8 signals. You could argue this is a ninth, but I try not to trade after bar 65 and definitely not after bar 70, just because the trade takes 4 or 5 bars to form a lot of the time, and it's a little bit difficult uh, to hold till the end of the day in those scenarios. But of the 8 signals that were takeable, 4 of them failed. So every once in a while, with high probability signals, you can see over the past few days, I don't think there was a losing signal on this day. There was maybe one losing signal on this day. I think that, yeah, just this. And over the past few weeks, it's been very high. Trade itself works at about a 76% consistency rate. And so every once in a while, you're going to have a day where half the signal's loose, and that's fine. But anyways, bar 1 and 2, strong consecutive bear bars. I'm just going to zoom this in a little bit. Strong consecutive bear bars. Odds are we're going to get another leg down. Good for the bears. We might be going a little bit lower. 4, 5, and 6, strong enough bear bars that I would expect, again, potentially some sort of third leg down. I think 8 has potential to be that third leg down, so it's a little bit difficult to hold. 9 and 10, you're hoping for basically a big bear bar to break out to the downside and get your symmetrical second leg. We obviously do not get it. 11, by the time it gets to bar 11, I would probably personally just exit the trade. It's some people might hold and continue scaling in, and you get lucky on 13 here and manage to get out. But I personally, if I was short, I did not sell 6, but if I did, I would have exited on the close of 11. It's an opposite breakout. 14 and 15, strong bull bars, good for the bulls, closing near their high or closing near its high on 14, and a large tail on 15, not as good. 17, 18, 19, a 3 bar micro channel. 6,000 was right here, so it was pretty close. I thought odds were we were going to test 6,000. I think that's part of the reason for the whole dramatic sell-off that we got was because we tested 6,000 and we had been trying to. You see, we failed yesterday, and we had tried last week and failed as well. So I thought odds were we were going to test 6,000. 17, 18, and 19 is a late leg, but the bars are really good. So even with it being a late leg, I still thought we were going to get a little bit more to the upside. So I did buy the close of 19, and I bought more during 20. And obviously, we ended up getting a symmetrical second leg on 22. I did buy the close of 23, and I bought more below 24 during 28. Now, for me, 31, 32 is a break. I did not take 31. I thought it was too late of a leg. Thought that the leg count reset once we got 22, simply because we broke out above yesterday's high, all that important resistance. So I did take the buy. Once we get 3 legs up, 1 pull back, 2 pull back, whatever, maybe 4 legs up, 3 or 4 legs up, I know I'm in a late leg with 31, so I'm going to exit if I get a breakout against me. I exited on the close of 32, so I basically bought and I exited here. It's okay to wait for 33 because 32 is an outside bar, and a lot of times outside bars will pull back. They're more trading range bars. So if you did not exit on the close of 32, I think that's fine. I think it's okay to wait for 33. It's just that 32 was a big enough bar for me to qualify for something that I need to get out of. So I just exited on the close of 32. 34, I sold the close of 34. I thought it was good enough for me to assume that we were in a trading range. The tricky thing about today was the big up, big down, big confusion, right? We had this rally that makes it difficult to sell, and then this sell-off, which can make it difficult to buy, but big up, big down. So you're expecting confusion. We might get another failed signal here. Pretty fascinating. Obviously, like I said, when you're trading a high probability signal, I think over the past 2 or 3 weeks, I think the past 2 weeks has been working at about a 90% rate. So when it's 76%, every once in a while you're going to get one of these days where half of the signals fail, and it evens out essentially. But bar 34, I did sell the close of 34. You can see we traded above 36, so I got the symmetrical second leg down during 40. 34, the large tail on the bottom was disappointing. Thought that if we were going to go a lot lower, 34 would have closed stronger. However, obviously it did not. So I sold, and I was willing to scale in higher, knowing that we were probably in a trading range day after this. But the 4-bar micro channel on the 15-minute chart threw me off a little bit. As far as 39 goes, my profit target from 34 was right here. I tried to sell 39, but if you were watching, bar 40 moved really, really, really fast. So basically, like the 39 closed, and I went to hit the sell button. And then as this got filled, I clicked the sell button, and it filled me down here. And that's just too far away from the entry price. So I just exited at the market. So although it is a good trade on 39 and it ended up working, I ended up missing it because I didn't get filled fast enough. So we have a strong move down, probably 3 legs, 1 pullback, 2 pullback, 3, and then a reversal up, 43, 44, 45. I did take 45. I thought it was a pretty good trade. The issue with 45 is obvious. This, right? This is obviously the big problem with 45. However, we also have this. So I bought on the premise that we are not in a bear trend and that we're probably in a trading range, if anything. With as far as these large losses go, in general, large losses, I did lose this trade, but I've been avoiding them. I avoided a large loss yesterday. I avoided 2 large losses today, and I did not take 51, so I avoided that one as well. I've been getting a lot better about avoiding the losses, but it just takes time. You have to get better at executing your trades and figuring out, how you're going to manage the losses. Trades where the pullback starts with a surprise against you, one of the surprise definitions that I've talked about a bunch of times, only half those trades win. And trades that do not start with a surprise against you in the pullback, stuff like this, 92% of those trades end up being winners. So you just have to be really careful when you get a surprise against you to start a pullback, because a lot of times that is what ends up, causing the losing trades. Only half of those trades win. What threw me off on this trade was that when I get immediate follow through, 96% chance that I get at least 0.5 R, and I got immediate follow through on 46 and more on 47. So in my mind, I thought it was okay to hold and just wait for that half an R. Now, 96%, by half an R, I just mean half the range of the signal. Now, 96% is not 100%. So 4% of the time, you're just going to get stopped out, and that's just how it is. But there was 3 legs up, 1 pullback, 2 pullback, 3. It's a little bit difficult in trading range. I thought it looked more clear over here. I ended up holding and getting stopped out. I wanted to get my half an R and just exit. I got to do the math out at some point, figuring out how often, how effective is it to wait for that 0.5 R. Because the reality is, if it occurs down here and you get a bounce, you're just going to get out basically where the surprise was. And it's okay for me to exit at the market when I get a surprise on 54. But this was leg 1, so that was why I held the trade. And I was just kind of sitting there telling myself 96% chance. And obviously, this was not a part of that 96%. I still, I'm not sure I did a whole bunch wrong here. You should probably exit on the close of 54 after the 3 legs up. But again, it's just so unlikely that you don't get at least some sort of small bounce that I just decided to hold it anyways and see where the trade went. And obviously, I got stopped out, so I did take a loss there. 56, 57, 58 large tails, and then we have technically a 3-bar micro channel or a 4-bar micro channel, 58 through 60, probably get some sort of second leg, which it did on 62. And then you can see we sold off. We have 3 large legs down, 1, 2, and 3, and that third leg broke the channel line. So a little bit less likely that we get a breakout below a channel, obviously. And you can see we reverse back up. But, you're probably just going to lose. If you're trading the 3-bar micro channel, you're probably just going to lose on a day where 50% of the signals fail, because you're usually risking more than your reward. So if half the signals fail on a day like that, like today, then you're just probably going to lose money. And, on the days where all the signals work, which are pretty common, these kinds of days where half of them work or happen maybe once a month, sometimes twice a month, but usually about once a month, this sort of thing will happen. But in the days where all the signals work, that's why it's important to keep taking them, even if you're up, because you're building up for when a losing day comes around. As far as the daily chart, we've touched 6,000. Thought that was important. but it just looks like we're starting to go sideways. So I think we're forming, I've said it a bunch of times, I think we're forming a trading range up here. I don't know where the bottom would be. It's not super clear, right? It could be all the way down here, all the way up here. It could be that large of a trading range. It could be a smaller trading range. It'll probably be a smaller trading range first and break out into a larger one. The weekly chart, again, getting tails on the top. I'll be interested to see how this week closes. If we get a strong bear bar closing near its low, we might need a few legs sideways to down, but we'll see. All right, that's going to be it for this video.